India's central bank has raised a key lending rate for the third time in 3 months to tame stubborn inflation. The Reserve Bank of India raised its key lending repo rate by 50 basis points to 5.4%, bringing it back to pre-pandemic levels. And it may raise rates further as its chief pledges to do whatever it takes to bring inflation back to target. An RBI governor says core inflation remains elevated, adding that price gains will be above the central bank's 2 to 6% tolerance range. And rising prices in India have provoked anger across the country. Indian police have detained dozens of opposition Congress party lawmakers, and they were trying to march to the president's palace and prime minister's residence to protest against soaring prices and a tax hike. Let's bring in our correspondent Rebecca Bundan from Mumbai for the latest. Rebecca, so how are the protests against inflation unfolding, and how will they affect the government's future policies?
There have been quite dramatic scenes today. This was a nationwide protest that was called by the main opposition party, the Indian National Congress. Earlier in the day, we saw Congress leader Rahul Gandhi being detained by police. And then just recently as well, later in the day, we saw Congress leader Priyanka Gandhi actually being detained, dragged off by police as she staged a sit-in just outside the party headquarters. Police were trying to persuade her to end the protest, but the protest was continuing. She ended up being dragged off by police. Rahul Gandhi actually spoke about these measures being signalling the end of democracy, that people should have the right to protest, but police had actually denied permission for this protest to take place. Now, these protests that were held today as well, even though there were MPs, Congress MPs in Parliament who were wearing black shirts, black bands as parts of this protest as well. These protests were called because of rising prices, inflation, unemployment in the country, tax hikes as well on goods and services, taxes on essential items. So these are really issues that resonate with a lot of people at the moment. And measures like this, protests like this, and the attention that they're getting will actually put more pressure on the Narendra Modi government to actually take steps to try to ease this financial pain that a lot of people are facing. It's really the common man that is affected when fuel prices are high, food prices are high, if there aren't enough jobs. So this will add to the pressure on the government to actually take steps to try to ease this situation for people.
Yeah, certainly rising prices concerned lots of local Indians over there. And also we're seeing that today the RBI rate hike came as a surprise in terms of its magnitude, and more are set to come. So how are people reacting to the monetary tightening as higher interest rates will add to their cost of living?
Yes, that 50 basis point increase was higher than many analysts had anticipated. Some had actually forecasted that might happen, but others were predicting that the rate hike would be much lower than that. So it did come as a surprise to many, the magnitude of it, as you said. Now, the fact of the matter is that the reason that the RBI is actually taking this step to raise interest rates is that it wants to bring inflation under control. It's been uncomfortably high for the past few months. In the latest figures show in June that it came in above 7%. The upper end of the RBI's inflation target is actually 6%. So these levels are uncomfortably high, and that's because of commodity prices. That's because of food prices. That's really feeding into high inflation levels. But on the other hand, the problem is when interest rates increase, then a lot of things do become more expensive for consumers. If we consider home loans, for example, car loans, the cost of borrowing does go up. And also for businesses, it becomes more expensive to borrow money. So that impacts their expansion plans. But on the other hand, the savings rates go up, so that's good for people who are saving. And ultimately, the target of the RBI, the central bank, when it increases interest rates, is to try to tame inflation. So the idea is that eventually prices should come down broadly in the market. But on the other hand, India is facing a lot of external challenges at the moment that are beyond its control. The geopolitical risks, global money tightening, global tightening of liquidity, the risks of recession elsewhere in the world. All these are factors, commodity prices as well, all these are factors that are beyond its control. So the central bank will now have to watch these factors very closely, see how things unfold, and actually try to balance managing the economy, making sure that India's economy can continue to grow while keeping inflation under control, which is a very difficult balancing act.
Well, certainly. Thank you so much, Rebecca, for your report. Rebecca Bundan reporting from Mumbai.